So, Switzerland just did something absolutely wild with a meme coin. We're talking about a dog token getting listed on one of Europe's most prestigious stock exchanges. And before you roll your eyes and say another meme coin pump, the whales are positioning themselves like they know something we don't. Bonk is sitting at a critical breakout point, institutional money is pouring in, and retail traders, they're doing exactly what they always do at the worst possible time. Let's break down why this might be the most underestimated play in crypto right now. Welcome back to the channel. If you're new here, I break down crypto moves before they happen, not after. So smash that like button, hit subscribe, and turn on notifications because what I'm about to show you could change how you look at meme coins forever. According to BitCapital's official announcement, they're launching the first ever Bonk exchange-traded product on Switzerland's SIX exchange on November 27, 2025. That's in 4 days. This isn't some random offshore exchange either. SIX is where serious European institutional money trades. We're talking pension funds, wealth managers, the whole 9 yards. Now BitCapital is partnering directly with the Bonk team to offer fully regulated exposure to this Solana native meme coin. European investors can now buy Bonk without touching a crypto wallet, a CEX, or dealing with DeFi degens. They're wrapping it in a neat little regulated package with daily net asset value reports and full transparency. Here's my take. This is massive for legitimacy. When a Swiss exchange, known for being more conservative than your grandma's investment portfolio, decides a dog meme coin is worthy of an ETP, something fundamental is shifting. The traditional finance world is acknowledging that meme coins aren't just casino chips anymore. But wait, there's more happening behind the scenes that makes this even spicier. According to the announcement, Sharps Technology converted part of its 2 million SOL holdings into Bonksol back in September. That's not pocket change. We're talking tens of millions of dollars. They backed this move with a financing deal through Cantor Fitzgerald. Yes, the same Cantor Fitzgerald that's deeply connected to traditional finance. Then, Tuttle Capital files SEC documents for a Bonk Income Blast ETF. Suddenly, everyone wants a piece of the Bonk pie. When institutions start filing regulatory paperwork, they're not gambling, they're positioning for something bigger. Meanwhile, Bonk Inc. just dropped their third quarter earnings, and they're showing 1,200% revenue growth in beverage sales. They flipped from losses to gross profit, paid off legacy debts, and are sitting on $9 million in cash. CEO Jarrett Boone says they've cleared the anchors holding them back. Translation: this project is getting its house in order right before institutional money arrives. Then Bonk Holdings Inc. drops a bombshell, a $32 million Bonk purchase, their largest buy ever. They now control nearly 3% of the total supply. When a publicly traded company parks $32 million in a meme coin, they're not day trading, they're accumulating. But here's where it gets tense. Bonk just dropped 10% in the last 24 hours. Bitcoin dipped below $85,000, dragging everything down with it. The bear bull power indicator shows sellers are in control. Volume spiked to $200 million, but the price is bleeding. So, are we looking at institutional hype or a massive bull trap? Let me show you what the smart money is actually doing while retail panics. According to data from CryptoQuant, spot and futures whales are placing massive orders on Bonk right now. Not yesterday, not last week. Right now, while the price is getting hammered, they're buying at discount levels right at the apex of a multi-month consolidation pattern. Look at the chart. Bonk has been forming a massive falling wedge for over 4 months. So, this pattern is actually a textbook bullish continuation setup. The last time Bonk traded at these levels, it rallied really hard during altcoin season. That pump, well, it lasted until August. Now we're back at the same zone, except this time there's institutional backing and, an ETP launch happening in just 4 days. Here's the kicker. Retail traders already lost this battle once. Between January and May, retail activity was super high at similar price levels. They ended up selling the bottom. Then whales came in after retail capitulated and drove the price up. The same script is unfolding right now, and retail is once again selling while whales accumulate. The spot taker cumulative volume delta flipped bullish on November 8th. That's significant because it measures the last 90 days of trading activity. According to this metric, aggressive buyers, whales, have taken control. And guess what? November 8th is right when Bonk ETP hype started circulating. My expert take: this isn't coincidence. Institutional players knew about the ETP launch before it was public. They've been quietly accumulating while retail traders were distracted by Bitcoin's pullback. The bear bull power indicator shows sellers aren't as strong as they were in mid-October, suggesting momentum is shifting. The technical setup is screaming a breakout. The falling wedge, the whale accumulation, the institutional ETP launch, and the public company buying spree. All of this is converging at the same moment. If volume continues climbing and Bonk breaks above this consolidation, we could see an explosive move. Now let's talk about what makes this different from every other meme coin pump and dump. First, regulatory approval from a Swiss exchange is not easy to get. Switzerland doesn't mess around with financial regulations. For BitCapital to launch this ETP, they had to jump through serious compliance hoops. This means Bonk passed institutional-grade scrutiny. Second, the timing is suspiciously perfect. The ETP launches on November 27th, right as Bonk sits at a critical support level inside a bullish pattern. Either this is the luckiest coincidence in crypto history, or someone planned this meticulously. Third, whale behavior is textbook accumulation. When large players are buying aggressively while the price drops, they're absorbing panic selling from retail. They don't care about short-term price action. They're positioning for a larger move. Crypto quant data doesn't lie. Whales are loading up. Fourth, the fundamentals are actually improving. Bonk Inc. isn't just a meme anymore. They're generating real revenue, clearing debt, and building actual business operations. That 1,200% revenue growth isn't a typo. They're selling real products and making real money. Meme coins with improving fundamentals and institutional backing historically outperform pure speculation plays. Dogecoin did this. Shiba Inu did this. Now Bonk is following the same blueprint but with faster regulatory adoption. According to on-chain metrics, the consolidation could extend if broader crypto market conditions stay weak. Bitcoin's health directly affects altcoins, and BTC is currently struggling. But historically, altcoins that consolidate during BTC weakness and hold key support levels tend to explode when BTC recovers. The risk here is obvious. If Bitcoin crashes below $80,000, Bonk could retest lower support levels. The falling wedge could fail, and all this whale accumulation might need more time to play out. Markets don't care about your timeline, but the potential reward is massive. If Bonk breaks out of this pattern with the ETP launch as a catalyst, early buyers could see significant gains. The risk-reward ratio favors patient accumulation at these levels, especially with institutional money about to enter the market. My strategy? Watch for a confirmed breakout above the wedge with increasing volume. If that happens alongside the ETP launch, we could see Bonk make a serious run. Until then, this is a high-risk, high-reward setup that requires tight risk management, so there you have it. Bonk is sitting at a critical juncture with institutional backing, whale accumulation, and a Swiss ETP launch in 4 days. This could be the start of something big, or just another chapter in crypto's endless drama. Either way, we'll be watching closely. If you enjoyed this breakdown, check out my other videos. Drop a comment below with your thoughts on Bonk. Are you buying the dip or staying on the sidelines? And as always, hit that subscribe button because we're just getting started. Remember, this is not financial advice. Crypto is extremely volatile and risky. Only invest what you can afford to lose completely. Do your own research, manage your risk, and never invest based solely on YouTube videos. Stay safe out there.